Nobody ever sat you down and explained how money actually works, not in school, not at home, not even when you started earning it. You were taught how to memorize formulas, how to write essays, how to follow rules, but the moment you got your first paycheck and realized a third of it vanished, you were on your own. Money quietly shapes where you live, how stressed you feel, the choices you make, and the risks you avoid, yet most people spend their entire lives interacting with it without understanding it. This video is about the financial rules that run your life. Without your consent, no hype, no hustle culture, just the fundamentals. Schools skip and the cost of not knowing them. On taxes, the first shock. Let's start with the moment everyone remembers. You work hard all month, late shifts, long hours, you finally get paid, and the number that hits your bank account is smaller than expected. Where did it go? Federal tax, state tax, social security, Medicare. It feels like money being siphoned off by invisible hands, and you're expected to accept it quietly. Here's the truth schools don't explain. Taxes aren't punishment. They're the membership fee for living in a functioning society. Roads, hospitals, public schools, food safety, infrastructure. Yes, also things you will never personally use, but what isn't explained is how many ways money gets taxed. Income tax hits what you earn. Sales tax hits what you spend. Capital gains tax hits money your money makes. Payroll taxes fund retirement and healthcare systems you won't touch for decades. You pay when you earn, you pay when you spend, you pay when you invest. And then comes the strangest part. The government already knows how much you owe but makes you calculate it. Get it right? Fine. Get it wrong? Penalties. Understanding taxes doesn't make them disappear, but ignorance makes them expensive. 2. Banks, your money isn't sitting there. Most people think banks store money. They don't. When you deposit $1,000, the bank doesn't lock it in a vault. They lend most of it to someone. Else. Car loans, mortgages, credit cards. This system is called fractional reserve banking, and it works because not everyone asks for their money at the same time. Banks are not vaults. They're middlemen. They pay you a small amount of interest, then lend your money out at a much higher rate. That difference is their business model. Why do people still use banks? Convenience, safety, digital payments, insurance protection. In the U.S., deposits are insured up to $250,000. The government collapses, so banks aren't evil. But they are not neutral. They make money because you don't fully understand what they're doing. 3. Interest, the quiet force. Interest is the most powerful concept in moneyland, the most misunderstood. Interest is simply money charging rent. When you borrow money, you pay interest. When you save or invest, you earn interest. Same mechanism, opposite sides. There are 2 types. Simple interest, predictable, flat, boring. Compound interest, earning interest. A compound interest doesn't look impressive early on. That's why people underestimate it, but over time, it snowballs. This is why small credit card balances become financial disasters, and small investments become life-changing. Interest doesn't care about effort. It only cares about time and consistency. If you're paying it, eliminate it fast. If you're earning it, leave it alone. Interest is either your enemy or your quiet employee. Inflation. Why saving feels pointless. Inflation is not dramatic. It doesn't crash. It doesn't scream. It erodes. Your money still looks the same. It just buys less. Inflation happens when too much money chases too few goods. Supply chains break. Costs rise. Expectations change behavior. A little inflation is normal. Too much destroys savings. This is why just saving cash fails long term. Your money isn't disappearing. Its purchasing power is if your money isn't growing faster than inflation, you're falling behind quietly. Recession's the reset button. Recessions feel sudden, jobs disappear, markets fall, confidence evaporates. But recessions aren't accidents, they're part of the cycle. Expansion, peak, contraction, recovery. They expose weak businesses, bad debt, and fragile systems. Painful, yes. Permanent, no. Those who panic sell lose. Those who understand cycles prepare. Schools teach history. They don't teach at economic seasons. 6. Credit scores, a trust rating. A credit score isn't wealth. It's on a reputation, not it answers one question. Can this person be trusted with borrowed money? You can be broke with a great score, or wealthy with a terrible one. Payment history matters most. So does utilization, age, and consistency. Credit isn't about morality. It's about predictability. Learn the rules or the rules decide for you. Money is a belief system. Money only works because people agree it works. Paper, numbers, digits. Value exists because of trust. Break trust, inflation explodes. Maintain trust, systems function. This is why managing money is less about math and more about psychology. 8. Investing defense against. Investing is how you stop trading hours for survival. Stocks garner ownership. Bonds, white lending. Funds, diversification. Real estate to your leverage. Risk exists, but avoiding risk guarantees loss. Inflation punishes inactivity. Time rewards patience. Value, why some people earn more. Money follows value, not effort, not fairness. Value, solve bigger problems, earn more. Perceived value matters as much as real value. This is uncomfortable, but true. 10. Time, the final advantage. Time multiplies everything. Good habits compound. Bad decisions compound. Most people don't fail financially. They run out of time without a plan. Common lies schools never correct. Cash is safe. Cars are investments. Gold is risk-free. Maxing retirement comes first. Crypto is guaranteed freedom. None are fully true. Context matters. Professional ending. Money isn't complicated on purpose. It's confusing by neglect. Once you understand how incentives, time, and psychology interact, the fog lifts. If you want more calm, clear breakdowns of how money quietly shapes behavior and decisions, consider subscribing. Understanding money doesn't make you rich overnight, but it does stop you from being controlled by it.